Hey, and welcome to the PipBandits weekly forecast for the week commencing June 9th, 2019. Every week we bring you tons of amazing content on this channel here, so make sure you subscribe to the channel so you don't miss out on anything that can make you a more profitable trader. In a few seconds, we're going to take a deep dive into the Forex charts and show you the pairs and areas where you can bank more pips this week. And if you stick around to the end, we're going to be giving you a bonus forecast, what we call the trade of the week. So see you in a bit. Wow, what a week. Amazing. Trump visited the UK and had dinner with the Queen. Draghi's speech literally resurrected the euro. The RBA cut interest rates for the first time in 3 years. And to top it all off, the NFP report came out negative. But despite all of last week's fundamental distractions, our signal group, the Pip Room, which you've all heard about, banged out 423 pips net positive in 4 days. Absolutely amazing, right? Well, now's your chance. If you haven't joined already, now's as good as, because for the month of June, you can go to the link in the description and use the coupon code that's right on the screen right now, 10 off 2019. And at checkout, you can give yourself an introductory discount on your first month subscription. Sounds fair? Right, let's get to it. So the first pair we're going to be looking at is the GBPNZD. And what you can see here is a lovely break of the trend line. Okay, this trend line has supported the GBP since December of 2018. And what you can see here is, roughly since the resignation of the UK Prime Minister, that the pound has continued to decline. Okay, so this is a clear downtrend, and in fact, to be fair, this decline happened around about May. So it's no coincidence that May has been no good for the pound sterling. No pun intended there. But you could clearly see it on the charts. So what we're expecting now is a pullback in and around this area of the 1.91839 area, and then a continuation to the downside with to take out the targets as shown in pink. Okay, so our bias therefore being a GBPNZD sell. Next pair is GBPUSD. Once again, May was no good for the pound, and we saw similar disintegration for the GBP during last month. Fortunately, our members took advantage of this trade, catching the meat of this trade right here. We try not to catch the tops or the bottoms for obvious reasons, and really we're quite satisfied with taking, I think, roughly about 130 pips of this, what was about 450 pip move from the beginning of May. So what we're expecting now is to see price push up into this area here, this region. Remember, support and resistance is not just a line, it's an area. So this zone here we have marked out as an area, key area of resistance, and this should actually price should push up into here and then come back down to test the lows and possibly break even further as shown on the charts to the 1.25046 areas. So our bias for GBPUSD is a sell. Next up is EURUSD. Last week's bonus trade of the week, this trade was identified as a completed head and shoulders. You could see the anchor, or the head, the left shoulder, and the right shoulder. You'll be hearing a lot more about this anchor method in future videos, so don't worry, okay? The funny thing about this trade setup, however, guys, is that we entered in this area, okay? At the break of the neckline, we entered in around this area in the retest of this neckline right here. And quickly went into profit, okay? Expecting a huge move down to the downside, which would have banked us over 300 pips, right? What happened next was Draghi. So Draghi came in, price pushed up, and took out our stop loss, which was trailing at about 60 pips. So that happens, we're not complaining. But further to that retracement, this pair continued to drop a whopping 160 pips over the next few days. And now we're expecting a move towards the 1.70364 area before continuing the downward momentum towards the targets highlighted on the chart. These green areas right here. Okay, so our bias therefore is sell for Euro NZD. Okay, what's next? Right, so AUDUSD, interesting pair. Here you could see around the middle of May, the anchor actually forming, which we identified. We then saw a push to the upside, and we smashed out our targets according to our previous forecast. Now, if you missed our previous forecast on this pair, make sure you subscribe to the channel, guys. Just hit that subscribe button right there so that you don't miss opportunities like this on our channel. Okay. What we're expecting now is a pullback to the 0.69641 region, then a continuation to the upside with targets as shown. First target being around the 0.70777 area, and then if we can get a break of this this major trend line right here, then we can see it push up to the 0.71803 area. Our bias, therefore, for this pair is AUD-USD buy. Next up is NZDUSD. Very similar in our bias to AUD-USD. This pair has now reached a key area of temporary resistance. And depending on market open, bear in mind that Trump has just agreed a deal with Mexico over trade tariffs. Depending on how the market reacts to this when it opens, we'd like to see the pair retrace back down to this area of 0.66000, and then look for buys and a continuation to the upside. So we won't be actually looking to trade this for any sells. What we're looking for buy positions and pushes to the upside. So our bias therefore for this pair is NZD-USD buy. Taking a look at USDJPY, okay. What we have is a clear downtrend, therefore we would be looking for sells on this pair and a continuation to the downside. Quite simply, you know, even with the trade war talks looming, we may expect a small correction to the upside first before a pull down to this area here, but this would be one of the targets, 107.500. Okay, so nice and short, USDJPY sell. So conversely, gold, last week we saw strong bullish movements and trend continuation to the upside. Brief consolidation before NFP just took this pair right back up to new yearly highs. There's more upside movement in this pair, barring any positive news from the US economy. Our bias is continued movement to the upside for gold to the area shown on the chart. And so therefore our bias for this pair is gold a buy to the area of the 1358 area. Next up is USDCHF, a really nice pair to trade at this time of the year. What we saw was a clean break of almost a year's worth of dynamic support, and now we can expect a retracement of around 40 to 70 pips before a move towards the downside targets as shown on the chart. And finally, and as promised, our bonus pair or the trade of the week. USDCAD, somewhat similar to USDCHF in that USDCAD tore past dynamic support that held this pair together from January 2018. And what we can now expect is a pullback before continuation to the downside with targets of 1.32300 and below. This pair is negatively correlated with crude oil, so look for buys in oil if you're feeling a little bit peckish. So our bias on USDCAD, our trade of the week, is a sell, and a bonus heads up on crude oil as a buy. And that is it, folks. Remember to like this video, share with other traders, and comment below letting us know how many pips you caught with our weekly Forex forecast. Until next time, trade well.